So, how does a claim work on a surety bond? Many times, a surety bond is thought to be similar to an insurance policy, which there are some similarities, but it's actually got one big difference. Both a surety bond and an insurance policy will help cover losses to a third party. However, a surety bond generally doesn't cover losses to the primary policyholder. For example, if you have, let's say, auto insurance and you drive your car and you crash into somebody else, the insurance policy will pay to fix the other person's car and to pay to fix your car. And then that's the end of it. You may pay your deductible, but the insurance policy is complete at that point. A surety bond is an indemnity agreement. What that means is that if you get a surety bond, let's say for performance on a contract, you are going to bid on a contract to build a bridge as a construction company, and you get a surety bond to guarantee that you're going to build the bridge properly. And halfway through the project, you disappear and you don't finish the bridge. Well, the surety bond company will step in and they'll pay to have somebody else finish the bridge or pay your client to cover their losses. However, that's not the end of it. A surety bond at that point will come back to you to recoup the losses they had, to recover what they paid. And you might think, well, why do I have to pay for a surety bond if I have to pay it anyways? Well, the reason for it is the client wants to make sure there's somebody there who actually has the money to pay. And that's what the surety bond does. It makes sure there's a deep pocket to pay for these losses. But once it's paid, that's not the end of it. You will repay it. And they'll do judgments, they'll do garnishments, they'll do litigation to do that. So make sure you understand the genesis of it. That's one of the reasons why surety bonds are relatively cheap, cheaper than insurance. The surety company will make sure it's a valid claim. They'll make sure your client has all the right documentation, and you want to make sure that there are no claims against your bond by fulfilling the contract properly, making sure that if there are claims put against it, that you defend those, and you make sure you understand what your obligations are under that contract. It also doesn't cover anything that happens to you. So if you're working on a project and let's say you have a loss, your surety bond is not going to cover you, only the third party of that policy.